Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and also subscribe. And all these option videos are sponsored by myself. So these are the weekly trade zones for the S&P Emini futures. $50 one-time payment for a lifetime subscription. I've been doing these for about 7 or 8 years now. And every weekend I send you all these trade levels. Again, $50 only. Go to daytradingfearless.com or click the link down below in the description. And also make sure you check out my Patreon page at patreon.com/daytradingfearless to follow along with my trading portfolio. So, with that being said, let's jump into the option video course, and I hope you guys enjoy it. And thank you for watching. Okay, in this video, we're going to talk about implied volatility rank, which is also known as IV rank. Okay, what exactly is IV rank? Implied volatility rank, IV rank, in simple terms, is the implied volatility percentile of implied volatility over the past 52 weeks. An example of this is the stock XYZ with an October expiration options. Current implied volatility is currently at 85%. And within the past 52 weeks, the high of implied volatility was at 100 and the low of the implied volatility was at 0. And the implied volatility of the option is currently trading at 85%. Then the IV rank over the past 52 weeks is at the 85 percentile rank. So let's take a look at what this is real quick, okay? So down here is IV rank, right? So we're looking at Viacom still. Viacom had a big drop, right? And we could see that as we start to move up, we actually saw IV rank move higher, right? Normally when stocks move up, the IV rank should go down. But again, sometimes it becomes stock specific. Like this, we saw as we started to rise, it went lower, but then there are times where as it rises, it goes up because it's making such a big move so quick. It's almost like, okay, what's really going on? So IV rank. So right now, we're looking at Viacom, right? The IV rank percentile is at 37.39%. So over here, we could see 37.39%, right? Now, the highest was 100, the lowest was at 0, okay? And this is over the last 1 year, right? The last 52 days that this is being calculated from. So now, remember earlier in the IV video that we did, we were looking at the May, okay, and we had 66% implied volatility. Well, was that expensive? Was that cheap? Well, it's relative to itself, right? Well, now we know if this is expensive or if it's cheap, because when we go look at the rank and we see implied volatility is 66%, well, we know, oh, 37 percentile. Okay, it's not cheap, it's not expensive, right? Anything above 50 starts getting expensive. Anything below 50 starts becoming cheaper. So right now we're at the 37. Now, as we were falling, okay, we went all the way up to the 67% over here, right, on the IV rank. So those options were really, really expensive. And so what that does is it makes option premiums a lot more expensive because nobody knows where the high or the low is, okay? A good example of this was on this day, on this drop, when we were at like $60 right here, I actually sold the 20 puts, okay, with 5 days left, I think it was, for like I think it was like 15 cents or something, okay? Which is kind of crazy because we're at 60 and I'm able to sell the 20 puts. And right now, and I was able to collect about 15 or 20 cents. I forgot the exact number because there was so much fear. Nobody knew where the stock was going. The market makers didn't know where to price it. So they just start pumping up volatility, and that's where volatility is. But going back to the IV rank, okay, so right now, if I want to buy these calls, they're not cheap, but they're also not expensive, right? We're at the 37 percentile of 1 to 100, right? So that's kind of the basics of this IV rank, right? So as it goes up or down, and in this case that we were talking about, it's currently at 85, then the IV rank over the past 52 weeks is at 85 percentile. So how do we use this information and how does it help us in our trading of options? Each stock has its own IV, which means Apple may have an IV of 50%, while XYZ stock may have an IV of 85%. Now, is the IV considered high or low on Apple? Well, I just kind of went over all that, right? If it's above 50%, it's usually you're starting to get expensive. If it's below, it starts getting cheaper. So Apple, with it being at 50%, okay, it's not expensive, but it's also not cheap. Okay, so these are things that you have to kind of really understand with IV rank. There is not a way to know unless we chart the IV on the chart over the past 52 weeks. So Apple may have had a high IV of 120, while the low IV was 45% over the past 52 weeks. Now remember, when we're talking IV, okay, we are actually talking about these numbers over here. These are our IVs, right? Implied volatility, but on the chart in this code, we have the IV rank. Okay, so over the past, if we're at 50, okay, and Apple had a high of 120 and a low of 45 over the last 52 weeks, and if we're at 50, okay, we're at the lower end, meaning options are the cheapest they've been in almost a year. So the current IV rank of Apple is around 2%, which means the options are very cheap and there's almost no extra premium pumped into the options. While the stock XYZ options IV rank is at 85%, which is letting us know that the XYZ options implied volatility are at the high end of the past 52-week range, and there is a lot of extra premium pumped into the option, aka options are very expensive, right? So if Apple was at 2% and we go 30 days out, okay, and we look at a out of the money call, we might pay $1 for that with a 2%. Well, if Apple was, we'll say 85%, we might pay $3 for that same option. So there would be literally $2 of pure premium pumped into that option pricing, okay, if the rank was at the high end. But because it's at the low end, there's hardly any extra premium. It's just a lot of time decay or theta that's in the option. So a good way to use the IV rank is when options have a high IV rank, 50% or higher, you want to be a seller of options. And when the IV rank is below 50% or rank below 50% is low, you want to be a buyer of options, right? So if we're above 50%, you want to be a seller of puts, right? If we're below 50, you want to be a buyer of calls or even puts, right? So So that's a very simple way of looking at that. Now, the Thinkorswim platform will show you the current IV and also the current IV rank of all the stocks with options. And you can also do live scans for stocks with options with the highest IV rank to help you decide what the best option strategy. So now if you go over to the trade tab, right? Right here where it says today's option statistics, if you click on that, okay, it gives you all the same information, right? It gives you the 52-week IV high, the low, and the percentile, right? So what's going on is it's doing everything here that the chart does, right? Now, if you want this code for your own charts, you could go to my website, daytradingfearless.com, and find it there. But you can also find everything just directly right here, right? The current IV percentile is at 37%, and then that will kind of tell you are options cheap or expensive just looking at that. So that's it for this video. Thanks for watching, and we'll talk to you on the next video.